very good.
Good,
How are you?
Yeah, not too bad, not too bad. A bit tired this week for some reason. Don't know why.
Yeah, me too. I need some holidays, man. Yeah.
Oh dear, the only man who takes work from holidays.
So midterms, right? It's going to be interesting.
Going to be
So
interesting.
we're going to talk about that in a bit.
Yeah, no doubt. We'll leave that one to you. We haven't got a clue what's going to happen with that one. Right, so let's kick straight into things then. We've had yet more of this rumor stuff out of China, the COVID stuff. The WSJ yesterday saying that China are weighing a zero COVID exit, but is proceeding with caution and without a timeline. A bit of a no shit Sherlock story there. Nothing adding to what we already know. I think the market probably getting a bit numb to all this headlines now. We're not seeing too many moves reflected in $1 on these headlines, and obviously that can change if we get something big coming out. Excuse me. Over to Japan, the Nikkei was reporting that government is potentially talking about raising taxes on the super rich. I don't know how it will go down in Japan, but usually elsewhere that doesn't go down too well and can see outflows of money. Particularly some money like the UK, which does have a big super rich investors, if you like, lots of property buyers from a lot of foreign money, Saudi money, Middle East money, that sort of thing in London. So you start hitting those people with higher taxes, and they tend to take some of their money out of the country. So I don't know how that goes down in Japan, but something to keep an eye on. A few bits and pieces of data coming up through Japan and Australia. We'll have a little look at these now. Some potentially important numbers there. Household spending was up in September, month on month, 1.8% versus minus 1.7% prior. Year on year, not as high as expected, still positive, lower than last month. But this number here could be very important. Overall wage income, 2.1%, so beating expectations and higher than last month. The overtime pay there year on year also with a steep jump. This is important because one of the key metrics for the Bank of Japan is seeing a sustained rise in wages. And these numbers are taking things well up above inflation levels or the inflation target, or where they see the midpoint for inflation. So keep an eye on the trend in those there, because the more they grow, the longer they stay higher, the more that's going to feed into expectations for the Bank of Japan to start changing tack on policy. The Finance Ministry was also out with some intervention numbers. They said that there was no stealth intervention in the quarter July to September. Obviously, the stealth stuff came in October, so we won't get that until the next quarter's numbers. Or indeed, I'm not sure if they've released their end of month stuff. Did they do that, Kay? Do you know?
Yeah, on the Bank of Japan website.
Oh, they did, didn't they? Yeah, it was well up on the prior lot, wasn't it?
Yeah. But they produce the data.
Yeah.
I think.
Yeah, so we won't know exactly how much was stealth and how much was normal stuff there anyway. Now some other data.
The numbers were around 6.3 trillion yen, right, for October. We've seen the numbers.
Yeah, but I don't think
they won't tell you how much is stealth, how much is real interventions. That's guesswork, right?
That's what I mean. Yeah, they haven't said how much was stealth and how much was batting. So, yeah. Maybe they'll do that.
A little word on those wages. They have been really affected by the overtime pay. They've been put up by the overtime pay, but one has to know that some of the lobbies are now starting to ask for wage rises of up to 5% for the new fiscal year. The best they got over the past years was anywhere close to 3%. So I think if we see numbers above 3%, then we can start to cheer a bit, and taking into account for the Bank of Japan. 2.1 is still a bit on the low side, in my opinion.
Yeah, still very subdued, but as we always know, the trend is your friend, and if the trend's upwards,
the trend in Japan is rather zero. So
yeah, rather flat.
uh,
So yeah, but, as we say, one to keep an eye on there. Over to Australia, again, a couple of smaller data points. The AIG services fell further into contraction there, 47.7. Westpac consumer sentiment data down 6.9%. So a little bit softer there in terms of the consumer, but it wasn't all that way. There was other data out as well. Household spending, there was a small report from the CAB or CBA Bank. Household spending was up to 0.9% versus minus 0.5% in September. So spending there looking a bit better. Business confidence there at 0 from the NAB, lower on the business survey. Inflation expectations in New Zealand was up to 3.6% versus 3.1%. And Australia also had some inflation expectations. They rose to the highest ever in the report at 6.8%. So despite what the RBA are doing, inflation expectations are rising significantly there. That's something they'll keep an eye on, as will the RBNZ. Speaking of the RBNZ, Orr has been confirmed as, I think it's a second term as the head man there. So he's going to continue in that line. Some other bits and pieces data there, leading index data down a bit from the prior 101.3, missing expectations. So again, on the whole, Japan is seeing some better data, but it's, it can be a bit jumpy at times. It's not all one way all the time, but generally looking at Japan, they are on a better trajectory for their economy and the various sectors around. Coming over the sea to the Europe, ECB's Kazakhs said there is no pivot for the ECB. And while we still say inflation is a problem, we will keep raising rates. Kestrel Kazakhs, he's a big hawk, if you weren't aware. Lagarde out with the same old stuff. Rates will rise more, keeping her hawkish tone. Germany's ECB member Nagel said that Germany output may contract significantly in Q4 2022 and Q1 2023. So potentially heading for deep problems in Germany, probably as much as anywhere else, really. Over to the UK, a small bit of news. The ExxonMobil refinery in Fawley, which is by Crow, about 25 miles from where I sit right now, has voted, workers there voting for strikes. We've seen similar situation in France with big refinery strikes, bringing big problems to petrol supplies and that sort of thing. This is just one refinery, but we'll obviously watch to see if it spreads to others. But we're still well in the grip of strikes going on in the UK here. Sunak is apparently going to announce a major LNG deal with the US, slated to be announced over the next couple of weeks. This was something that Truss had been working on previously, so that's been continuing. Going to be a deal to keep supplies of LNG coming in through the winter and into next year. So expect a lot of fanfare from that. Into the grocery CPI, grocery inflation, Kantar was out with some numbers overnight, and UK grocery inflation hit a record 14.7% in October. That's going to be something for the Bank of England to keep an eye on. Mr. Bailey and his rates may not rise as high as the market expect. Well, if numbers like that keep going higher, they will be. So I'm already calling bollocks on what he's saying about where he thinks rates are going to go. I reckon they're going to at least 5%, probably over the next 3 to 6 months, if I had to put a number on it. BOE's Peel pretty much echoing that, saying there's more to do and they need to raise rates further. Coming over to the US, one of our guys in the room, Mark, MRBH, put up a piece, a Fed paper from can't remember, San Francisco Fed, was it?
Yeah.
Saying that financial conditions are tighter than just what the Fed funds rate shows. The article's in our newsroom for those who are in the chat room, so if you want to read that, you'll get the finer details. But basically, taking everything together, other metrics that they look at for tightening financial conditions, everything they're doing with forward guidance, the balance sheet, all that sort of thing. This paper says it would imply the Fed's funds rate being at 5.25% as of the end of this September just gone. So why is that potentially important? Because the Fed do take monetary conditions, financing conditions as a whole, not just what the interest rate is. So they look at what's happening in spreads, in yields, in all sorts of things. And so this paper's put a number on it to say that actually, if you take it all together, the Fed's fund rate would be at 5.25% effectively. That's obviously well above where we are now. Will it influence policy in terms of how they determine future hikes? Probably not at that level, but if it does climb, if we start seeing all this mixing pot indicating rates 6-7%, that may start to influence them, because it will suggest that conditions are much tighter than where the interest rates are. That may be part of what they're looking at in bringing down hike increments and maybe going a little bit slower, but for a bit longer, just to keep that nice and smooth. Over to Germany, and just a few bits and pieces of talk on the Ukraine. We had this story out over the weekend, if I recall, yesterday, from the US, saying that the Ukraine should take the moral high ground in talking openly about negotiating with Russia, even if that's just to save some face. But Germany spokesman said they are. It's up to the Ukraine to decide when to have peace talks, and there is a lack of Russian willingness to enter into talks. They did also speak about the US, saying they're still concerned about this US Inflation Act and its impact on the EU. And I'm just starting to see a few more comments hitting the wires, banding around. Nothing strong, but wariness about what this US Inflation Act, the impact it's going to have on everywhere else. I'm not sure if that's going to be affected if we get this gridlock in the midterms, whether, I can't remember if this Inflation Act has actually passed or if it's in passage. I don't know if you know, Bran, being over there in the States, but that's the type of thing that might get caught up if we see a gridlocked houses and the Senate over the midterms. One last piece of data I just want to highlight, and then I'll bring the other guys in. Let's go back to it. We got some US consumer borrowing numbers or consumer credit numbers overnight, and consumer credit was down by around 5 billion. What's important here is that they have a number called the revolving credit, which is things like credit cards, loans, short-term borrowing, that sort of thing. That fell to 8.3 billion from 17.1 billion, so pretty much halved. And that's quite important because it shows that the use of credit cards is much lower. Obviously, there may be some skews in there because that's a very big dip. But what we're looking for in this type of number, the same with the Bank of England and consumer credit data, is, are there pressures building among the consumers? Are consumers having to tap the plastic more to pay for bills? So that revolving credit, as I say, credit card usage was down a big chunk. Non-revolving credit, which is fixed loans like car loans, mortgages, that sort of thing, that rose to 16.65 billion from 13.05 billion. So a bit of a rise there. That could be people locking in more longer term loans rather than using credit cards and things like that. So on the whole, that data signifies potentially that there's not any huge borrowing problems in the US among the consumer. No real red flags that perhaps we need to keep an eye on for spending there. And I think that's it from my list of scribblings. Guys, you got anything you want to add to that?
Not really. I mean, you covered the main Can you hear me? Sorry, yeah. The main data and all that. I mean, it's all about the midterms today and CPI on Thursday. But no, in terms of data and what happened overnight, it's been a pretty quiet morning, actually. So I think you've done a splendid job once again.
Thanks, mate. Hey, you got anything you want to throw in there?
No, not really. Just the Bank of Japan summary of opinions, which is the same thing, really. It's their minutes of the meeting piece, and they were, again, like somewhere showing a little bit of divergence starting to come into some of the members wanting to talk about inflation, and Kuroda saying, let's wait until I'm gone. So all a bit the same, but it does seem that the market is starting to take those talks a little more into consideration, as we are clearly seeing some dollar yen selling on rallies right now. This morning we had a bit of a rally, 30-40 pips compared to yesterday, and we're already back at yesterday's low. So yeah, this is a bit of dollar yen selling on perhaps on the back of it, perhaps on those wage data. But the big moment for wages and negotiations is going to be around the turn of the fiscal year. That's where we are really going to see how much the companies are willing to add to wages. And with all the stimulus packages that the government puts in place, it could be a good year this time. It just could be.
Yeah, definitely, mate. Definitely. I was just having a quick look at dollar one, because there's some comments out from D saying that he will comprehensively strengthen military training and preparation for any war, according to state media, and that China's security is increasingly unstable and uncertain. So a few comments out from him, just seeing if that was having any reaction in the one there. Not really.
But what did have a reaction is that there's again much more COVID issues in Guangzhou province, and that's taken the dollar CNH and or CNY up overnight from low 720s up to 727.5.
Yeah, and for those of you in the Forex Analytics room, you will know that there's some big option plays going off this week in dollar one. There's up to, at the moment, just under 12 billion going off at certain strikes there. That's information for subscribers in our chat room. I'll put a link up shortly for anyone else who wants to join that, but it's something I'm going to be watching really carefully here in dollar one with these big expiries, because if I feel that it's putting the price, the dollar or the one, out of sync with what's going on in the rest of the market come expiry, that's the sort of trading opportunities I look like for maybe some catch up once those expiries goes off the board. So that's what I'm looking at.
Ryan, one thing that thank you, Jane, she pointed it out and I forgot to mention it. You can see that cryptos are underperforming massively today. Both down, like Bitcoin, Ethereum down 4 or 5%. There's been some kind of rumor about FTX, in some kind of liquidity trouble. Obviously, they're not saying anything. It's the usual. Everything is cool. Don't worry. But where there's smoke, there's fire, and usually. So just something to keep an eye on. And this is bringing us close to the to support in Bitcoin again. It's about 1,500 away. So have to be wary of these things. And unfortunately, cryptos are quite vulnerable to news bombs like that. And, from one day to 1 minute to the next, you have massive moves due to announcements or rumors like that.
Yeah, I don't know if it's related. I think I caught something yesterday. I don't pay that much attention to crypto news, but I think it was Binance, because there's this problem with FTX. They're looking to unload their holdings, but apparently going to do it in a supposedly managed way. So a big chunk there they might be offloading, which that might be some of the stuff that's weighing there. Yeah. if you're into your cryptos, you need to check that out.
Yeah,
What's going on?
it's bringing it closer to my bid, yeah, and just another $19,000 to go, and I'll be in.
I'm gonna be bid a buck ahead of you, so don't worry about that.
I know.
Oh my
The price
God.
of a decent teddy bear, $30. That's what it's worth.
Exactly. Right, so let's. So, Stel, what are you expecting from these midterms? I mean, we've been looking into. Everyone's trying to find out what's going on. The timeline isn't going to be that quick, apparently. There's going to be some release of results on postal votes and things like that. But it could be anywhere up to a week before we get there.
Yeah, it takes a few days usually because exactly like you said, there's many ways of voting. But the main thing is that we have the Senate and we have the House of Representatives. So the question is who wins what. And I've looked at a few polls, and obviously polls are never perfect, but they give you a very good idea. And it looks like the House is going to be a Republican win, no doubt about it. It's something like 80% chance or something. No, more than that. So the House is going to be taken by the Republicans. The problem that you can have is when you have a government that doesn't control the Senate and the House, and if you have a split in the who controls the House and the Senate, obviously it's much more difficult to pass legislations and do whatever you need to do as a government. The Senate apparently is almost 50-50 with Republicans having a slight edge. And I've seen 2 or 3 polls, pretty important ones like Politico and another one called 538 Project 538. Anyway, it looks like the most likely scenario is that Republicans win both. And that's going to be a huge headache for the government, obviously. Donald Trump also announced yesterday that he said he's going to make a very big announcement. Is it this week or next week? I think next week.
15th.
On the 15th, yeah. And obviously, I think there's probably no doubt that he's going to announce he's going to run again. So, this is not good for stability. It's not good for the dollar, definitely. So we have to be wary of that. The problem is that the Senate is very close to call. So if we do get a Democrat control of the Senate, that's going to change things. But I think if they're both controlled by Republicans, I think that's the worst case scenario for the dollar for me.
Yeah, no, agreed. Now we had a bit of a funky day in markets yesterday. We saw, obviously, in the morning we saw Euro cable all popping higher, and they sort of kept the gains up there pretty much from the move up. They given a bit of it back, but we saw, as I say, fairly decent move up in the pound and euro and other pairs against the dollar, which was a little strange because we didn't see sort of moves anywhere else. And then in the afternoon, we got yields popping all of a sudden. Let's go on to, where are we? Let's go on to something like the 10s. So we got a little pop up in yields later on. And FX really didn't do a lot on that. So I'm a little bit lost of what was going on last night. I don't know if it was the midterm stuff, just people repositioning for that sort of thing. I don't know if there were some flows going through because the yield move was pretty quick. So it could be people just some big orders dropping into the market, just pushing prices around. From here, go on, mate.
There was a lot of corporate bond issuance going on yesterday.
Yeah. A lot of that stuff.
In the New York afternoon, and the rest I think is midterms because people are expecting what Stel explained, the possibilities, and people are expecting it. So there's already a bit of pressure on the dollar. There's upward pressure on the equity markets. That is the split or the split government or lame duck president scenario that. If we would get that is exactly what we saw yesterday. That is likely to happen. The only thing that was a little bit out of sync with it were those yields coming back up, because there's a big divergence in opinions in the market anyway about what should happen if with the yields if we get a split or a lame duck. In my opinion, if you get a lame duck president who can't do anything anymore, it's bearish for yields, bullish for bonds. But yeah, I'm not sure that if we get really a blockage of whatever Biden wants to do, that I can understand the early move in the equities, especially people also speculating on Trump rerunning will be good for the economy as well. But is it not going? Are we not going to run into a buy the rumor, sell the fact case? I'm just a little worried about that scenario as well. But yeah, if you get a split government, I think what we saw yesterday is exactly what we risk to see, or the chances are that we see after the midterms. And as you say, I mean, some of districts could take actually weeks to sort out. But so
yeah.
But the the one thing about it that I read as well is that there's actually a very high percentage of votes already been posted. So we could be in for a kind of a record vote in numbers compared to any other midterms, which usually are a bit left on the side by most voters compared to presidential. So it looks as if we are going to get at least a pretty decent turnout.
Yeah, I think because those votes are all in, we should get some early results, but then it's going to probably be the last dregs that drag on. So we hopefully will have a good idea in short order. But on the gridlock thing, I mean, I've been thinking about it. Would you not think there's a case to say that yields would go higher because of the gridlock and you know the market then put in some uncertainty on finances, you know, because the debt ceiling and all that stuff's going to come into play.
But the debt ceiling is only well into 2023. Yeah? That should not, the debt ceiling, we shouldn't, I mean, the debt ceiling, the next is somewhere in 2023. It's not for like in the immediate. No, but why would yields? I mean, that's my question. I mean, it's a genuine question. Why would yields rise when Biden can't put his further build back better, build and buy American, and all these kind of things? There, I understand that yields would actually be pulled higher, but I wouldn't. I don't know why yields would rise if we get such an outcome where the Republicans take everything and Biden is left just sucking his thumb on his chair. So.
Yeah, I'm thinking, you know, more the case like what we saw in the UK, where the political instability caused yields to rise, borrowing costs to rise. You know, faced with inflation, does the Inflation Act get put under pressure? Does the measures to combat inflation, bring prices down, get put under pressure? And just, you know, we see a whole lift in what might happen with inflation, or market expectations for inflation not being contained. You know, that means rates potentially going higher. I don't know. I just usually think political instability can, you know, it puts the premium on borrowing costs from the market. So that's, but I don't know. We could both be right, depending on the view. We'll see what happens. We'll just trade what's in front of us, eh? Right. I'm not looking at an awful lot. It's more a bit of management of what I've got. Aussie dollar not doing much at all. You know, playing between the minor levels, in between the bigger range. So I'm just sitting here twiddling my thumbs at the moment, waiting to see if we get a break this 65, 30, 20, 40 area. Not really doing much at all, really, and it's a pretty much the same for a lot of pairs going on. You know, dollar yen. Yeah, we're tracking lower slowly. You know, we're making lower highs. So it's keeping the pressure on, but, you know, we're still within this range, you know, this 145s, 145.50 area. You know, that's the levels we need to have a test, find out what's going on there. Are we going to hold that, stay in the range? Is it going to break? So again, as I say, a little bit twiddling my thumbs. Gold, again, come off the highs. We've come out the zone again. Are we going to see it resisting again? Looks like we could be. Just some small moves up here that we're under the zone, we're holding the zone. Where can we go from here? We got this minor intra range, if you like, from 60s down to 40s before we get back down to those lows. Can we have a move down there, hold it for a retest of this zone again? But for me, I'm not doing an awful lot here, just managing positions, as I say. Kay, you got much going on?
No, mate. I mean, I'm really a spectator. I mean, no, okay. I've got a little bit running. I'm a little bit long euro sterling. Do you want me to share the stuff, Ryan? Do you want me to share screen?
Yeah, go ahead, mate. Stop
okay.
it.
Let me just grab it. Okay, euro sterling. I got a little bit on there, just on that support. It looks a little bit like a horse with like a pulling horse, like but it doesn't want to really get out of the starting blocks. Looks a little bit like maybe it could even reach down here, but I thought buying a little euro sterling, because also as you rightly pointed out, Ryan, Lagarde seems to be a little bit more hawkish, and then the Guindos added a little bit of icing on the cake this morning. He is normally, well, he is Lagarde's dog, as we know, but he's normally pretty dovish and always very cautious. And this morning he was saying that they need to raise, they need to start to talk about QT, whether it's this year or next, but they need to talk about it. So yeah, it's and the other reason why I bought it is also because I'm a little in doubt about those Hunt and Sunak plans on for the sterling. We have to wait until the 17th to know exactly what they are going to bring forward. But anything I've seen and read so far is anti-business, anti-business. I don't know how you say it. It doesn't look. It could be good for the sterling in a way that the government coffers won't be emptied the way that Truss and Kwarteng were trying to do it. But on the other side, if you're putting anti-business measures in place, usually the currency doesn't really like it for very long. So that's one that I'm keeping an eye on. I'm not going to get married with the position if we break below yesterday's low. I probably let it go. Small risk only, so let's see what happens there. Another one I wanted to have a look at today. There's a bit of interest here in this dollar yen, I find of late. Yes, we're holding, call it the prior lows. We're holding them, but to me, it looks like there's a bit of supply in this dollar yen going on. Okay, we're back a little bit higher, but we can't hold highs, and it really started, well, where we did the other day, but really started at the start of November. We saw this little push higher. I think there might have been some stealth stuff going on there, but then did they succeed to put a cap on it? I'm starting to wonder really. Then we saw the successive flows, but every time we came up, failing. Now we're failing a bit lower again, just in front of the 147. I don't know. To really start to get going again, this dollar yen should really break above 147 again, in my opinion, and then confirmation through 148. But that may even be a big ask where we are now. So I would pay quite close attention to what's happening here on this 146.15 as a starter in the 145.60-ish zone. If that would start to go, there might be something more going on. Are the midterms a driver for this? Could be, but I'm being a little bit cautious. So for the time being, I haven't got a lot running. So far, I've been a buyer on dips, and I don't know, this price action has me being a little bit cautious right now. So that for the dollar yen. Quick look at what's happening in commodities land. This trend line really it held just once, and now we are above. I'd rather look at the horizontal resistance around 64.90 that we saw overnight, overnight. And then, of course, the 65.20-40 zone, as Ryan has already been highlighting a good number of times. This is really where the Aussie needs to push through before we can talk about a deeper recovery. The Kiwi is still a tad more constructive, in my opinion, just for the fact that we've been holding this broken trend line a couple of times. Okay, yesterday we tested a fresh high, but couldn't hold it. But we're still hanging around there, and I don't know. I've got the impression that what is this? I've got the impression that there is a case for this to go and have a little test of 60, the big figure in the Kiwi. People are and it's I've had this as well. I don't know if I kept it. No, I've killed it. But anyway, the height of this channel that we saw, the upward channel, the broken channel, translated here, that would have put us right around this 108.80, and that's where we are seeing the Aussie Kiwi hold up right now. So keep a very close eye on what's happening between 108.80 and 109 on the Aussie Kiwi. It could be very interesting if we get a break below there. There's probably another % to make, but the fact that it's holding might be a bit positive here, and why not try to crawl its way back up to the 110. But we have to see what's happening in between what RBA is saying and what the real economic data are doing in Australia, for sure. The Kiwi data are holding up pretty well, as we've been showing already of late. So it has to come from the Aussie, in my opinion, that this thing is going to get higher a bit. Quick look at the metals. Gold, well, it capped again around 1680. It's still our big zone, 1680.90. Still going to be the zone going into the midterms, going into what's happening with the inflation later this week. So this is really the zone to watch. And I'd say we might have to wait until the inflation data come out. Not sure that midterms or dollars are really going to get going before we get the inflation data. If we fail, keep an eye on the 1655. It's been a bit of a traffic zone, as we can see in this 1655 area. Now the other trend line comes in here. Bit of support here. Not going to do much before the inflation data. Ditto on silver, we've broken above. Haven't even retested it since. Bit of a shame, because I wouldn't mind in the meantime having reloaded a bit of there. I went out of all my add-ons. I'm waiting for this, really what's going to happen in the 21 figure 15 zone, and then the one that Stelios already was highlighting as well. I think it's the 200 DMA coming in there as well, around 21.5. That's where silver will play ball or not. The rest, maybe I mentioned about this. quick look on oil. You see what happened here. We're in the channel. Tried a little breakout, and we were mentioning about this 93, 93 and a half. Had a quick look above, and we failed. Perhaps now we could have a quick look back sub 90, if anything. It's trading around 90 and a half. Well, the CFDs that I'm watching anyway. Trading around 90 and a half. Yeah, 89 and a quarter or so. Should be coming in a bit down there. Yeah, the triangle on dollar yen, yeah. And then here, overnight I caught a little knife here around this zone. Already took half off because we had the little jump on more COVID issues in China. That Z line worries me a little bit, and I'm actually unsure why the CNH doesn't react to it. I would have thought it would have been weighing on the CNH a little bit, but I don't know. I mean, this thing, we have to keep an eye on it. But basically, we're still in the upward channel wedge. You call it as you want. The underside is now coming up to around 719. It's going to be another interesting level around 717. So keep an eye on that channel if ever you trade it. I don't know what happened in the South African rand, but all of a sudden it felt really good. Dollar rand really collapsed. I have missed data if they came out, or perhaps something with Eskom, the energy supplier. I don't know. But anyway, it's holding for the time being under the channel here, or under the flag. The line is around 1780. So keep an eye on that 1780, and then keep an eye on this one around 1762. And the fib lies around 1750. So this 50-62 zone on the dollar rand, probably an interesting to watch. Globally, I'm not having that much on right now because perhaps even more inflation than the midterms really can move things around a little bit. Dollar max, we are on the May lows, so keep an eye on that one. We are on the lows. We've done a test, and we are on the lows. Though we also well below the red trend line here. Keep an eye on it. What's going to happen over inflation and Banxico on the same day? So the mix could really get a double push here if it could break, or if the market doesn't like the inflation data in the US, perhaps put a retest in of the 760s is the closest there. But I think the bigger one is now going to lie between 1980 and 2020, the figure. But if we break below here, I don't really see that much before 18 and a half, okay? And that's it for me, Ryan, for today.
Yep, thank you very much, mate.
Ryan, just one thing I wanted to add. Dollar mex is something that's very close. Let me show. Hold on. It's only going to be one thing, but I'll show it anyway. Hold on. So dollar mex is really close to the previous lows, 1941. We're 1944, and you know, obviously there's going to be a move after the midterms, or as we get results. The question, and as we get inflation, the question is which way. But I like these kind of setups because if this goes, I think there is a pretty, I don't want to say easy, but there's a pretty straightforward path towards the high 18s, 18.5 to 18.7 or something like that.
That's what I just said still.
Did you say it now?
Just said.
Sorry,
just before.
Man.
When I was updating dollar max,
I was away for a couple. I was away for a couple of minutes, and I must have missed it. Sorry.
That's a good confirmation.
Sorry. Okay. There you
Always
go.
Good to get confirmation. Always
there
good
you
to
go.
Get confirmation.
It's Murphy's Law.
So
you're away for 2 minutes, and the thing that you're looking at gets mentioned anyway.
Would you guys be looking at a potential break short on that,
Yes.
or wait for it to break and then pick up the next low at 1850s?
I will wait. I will personally wait for it to break. When it does, I'm going to get in. You know, your stop, your risk is pretty well defined. It's above those, you know, those previous lows. I'll probably put in my my stop at 42 or something like that. And you know, if it's trades like this that usually, or obviously not always, usually lead to a quick win. You know, and that's what you want. Then you can secure your stop, put it where your entry was, and then you can, you know, slice it and run it as you like. But this kind of move, when it goes, I think this 1941, when it breaks, I think we're going to get to 1925 very quickly. And then you can adjust your stops and do whatever you want. So that's the way I'm going to play it.
Yeah, and
What-
if you
what
look
about-
at if you look at this, if you look at the little channel that we have been building here, it also points at mid to low 18s, where we were here in 2020.
Yeah.
So what would you be looking for a break, Kay, to
Yes,
play?
sir. I'd look for a break, and I think if dollar makes breaks, I'm going to push the accelerator again on Euromex as well.
Cool, good stuff. So it's good when you highlight these sort of things, because I love big levels like that. So I always keep an eye, obviously, on what you guys are looking at, even if I don't trade it that often. That dollar mex looks tasty, and that Aussie Kiwi looks a bit tasty at that level as well.
Yeah, I mean, the Aussie Kiwi is for the moment it's moving sideways, a little bit bumpy around around that zone, but it's if it goes, I think there's another percent and a half perhaps to or even 2% to make, because I have a trend line coming in from longer term.
These sort of tech setups are important, because it doesn't matter what your view is of the fundamentals, the RBA, the key, you know, the RBNZ, anything like that, the Mexico, whatever. These are big levels that you need to look at when trading, because they bring you opportunities. The chances are, if they break big. So you do get a good. You will get yourself a percent, 2% move on something like that.
Yeah, I think it really could. The thing is, though, if you want to trade the break dollar makes on it, I'd rather trade it on the US inflation than on Mexico, to be honest, because Mexico, we know that they are going to raise 0.75%, but they have already said that they may in future not follow the path of the Fed, reading that they may slow down a bit. But now, since the Fed announced themselves that they may slow down a bit afterwards, it could be a draw and the ball back on the middle point. So then the break becomes valid again. But if you want to trade it for the more medium term, if you really want to trade it for an extra 5% lower, perhaps the safest thing is to put your stop above that red line again if you want to trade it. But that's over 1% away, so it's a bit wide, but you can always adapt your amounts, of course, to trade it. But really, MEX could get a double push in the back if this goes. Actually, the worst thing would be that it breaks before we get inflation and Mexico, because that would really open the possibility for a saloon door. But I'd like it to break on Thursday, really, and hold until then.
Yeah. So that again is key, is how you trade it. You know, if you know you've got big data coming up. So look, the old story, a levels to until it's not. You know, you could say if it holds, it could be one hell of a double bottom now, and you could be well above 20 in short shrift. But you've got to look at how pairs move. So like Kay says, you go with perhaps a lower stake, wider stops, that sort of thing. For me, if you want to trade a break, like let's say it breaks today, but you're not sure because you got this big data coming out and stuff. So you sit off it, you leave it alone, and you see what the data does, or you look for a confirmation of the break. So look for a move under the level, then perhaps CPI comes out fairly strong. We move back up, we hit the level, we can't break the level. Then that gives you a confirmation that the levels potentially breaking, and then you get in with your shorts, and you try and ride it. So there's many different ways to skin a cat, and you've got to learn all these different formulas of trading these sort of big levels, because they are the ones that can give you the biggest rewards from them, because they will move significantly if they break. Do you want me to take the screen back quickly, Kay, before we finish up?
Sure, mate. Yeah.
No, we prefer case charts.
Oh, well.
They look a lot more like spaghetti charts, right?
Everyone used to tell me off for my colourful charts, my MT4 charts, and now it's like Joseph in his Technicolor Dreamcoat around here. So yeah, sunglasses at times. So that's the dollar Mex that Kay showed up. But then you get something that happens like dollar CAD, where at the 135 level, again, a really decent level, held it as support, decent bounces off it, but then it just becomes a bit washed out. So if you have a couple of goes, trying longs, trying the breaks, it doesn't work, you sit back, you pull back. The market is unsure what to do at this level, so you have to really leave it alone. But then you perhaps look at these prior lows, so it's telling you it's going to move under 135, but we can't get under 134.60s. So that becomes your secondary level. So now it needs a break of 135 and that low now before you might get a push lower. So it's all about just setting your parameters, adjusting to what the market's doing. We can't hold 135 at the moment, can't hold below 135 at the moment. So really there's no trade. So you have to then look at the short-term price action, maybe 135, 135.50s, down, excuse me, down to this 134.60s. That becomes the new area to play, to watch. That will be the decider for this 135 level. Anyway, we talk about this sort of stuff all day in the chat room. And if you do want to join the chat room, I shall put the link in the chat for you there. Obviously, prices have gone up, but you can still grab a 20% discount, exclusive Forex Flow discount for you boys and girls, and that will last as long as you subscribe, so you can keep that forever if need be. Oh, let's get the right link up there. Where's it gone? Oh, I've gone wrong. There we go. So yeah, do come along, check out the chat room there. You can also grab a trial if you come via the ForexAnalytix site. Is it still the same stuff, still? $1 for 10 days?
$1 10 days, yes, sir.
10 days, so you can come give us a trial. And if you like what you see, then you can use my discount to stay full time. And with that, we shall bid you a good day ahead. Thank you, Kay. Thank you, Stel, as always, for your input. Thank you to all the viewers for coming to the show. Hope we're setting you or seeing you right in things. Have a great day, everyone, and we'll see you tomorrow.
Have a good day.
Thanks, Ryan. Thanks, Kay.